here we are, a $1,200 put. We closed at 1216.01 on the S&P. 5 days in a row, the $1,200 put has gone from, oh, believe it or not, it was inflated up here at about $84 a contract. It's lost $50 per contract down to $35. And it's a $1,200 put that during the triple witch last week, they took 5 days of premium out as we broke slightly up there because they were in the money at one time. The $1,200 put was in the money when we were down around 1170 on the S&P. They were $30 in the money. That's why they took all that premium out there. On the other hand, when you take a look at that $1,200 call, which is now in the money, the buys were over here at $23 a contract, and the high of this current cycle, 51.50. They've gone quite a bit in the distance, and they're getting inflated. Yeah, we can keep going higher in here. But the thing about it is, when you compare the cycles, it's all going to be weighted on what that S&P 500 is going to do. We're going to get so cheap here, and we're going to get so expensive here, and then something is going to happen in the S&P. And what will end up happening, the higher that you get overbought here, the more upside resistance the S&P is going to have a trouble getting through, and these are going to start getting support. And when it does reverse, you're going to pop up this way here, and you're going to pop back down this way here. And what we're doing here is we're clearly defining a $1,200 call that's slightly in the money and a $1,200 put that is slightly 15 handles out of the money and 15 handles in the money. 108,000 contracts open at the $1,200 put, and you have 128,000 that is open for October. This is in October at 10/22, a whole month from now. And there are other strike prices that have volume. We got a 21,000 waiting here at a 12.25 put that is in the money, and a 12.25 call that's out of the money. We have a waiting here of 51,000 contracts open. Right here, 21,000 to the short and 51,000 to the long. So we can see where the risk on trade in some of these contracts, you got 58,000 people or 58,000 contracts open at the 1175, and on the other hand, you got 41,000 short here at the 1175. And it costs more people more money because the option prices are being cheated both call and put side. So we're going to be on high alert for the 1200. We will set alarms, rises to, falls to. We will then, MMTs, go right back over here and use our data set of where the S&P trend is, how it's weighted, and its whole 2011 September lows, and part of October is in here. We got everything here. We know what this means. Doesn't lie. And really, you had those amount of volatility down days, and you had these amount of volatility up days, and nonetheless, you're net positive in the trend, 118. And you had 611 round trip points in the S&P, 611. So to answer people's questions, these 5-day breakouts and 5-day reversals are weighting the put to call ratio, and the current trend cycle goes along with it. And if we hit a gap up, they will gap this down in price. Maybe they gap it down to 23.5. They gap this more up towards 62, and you would be inflated here, and we will be making the immediate transaction over here at the $1,200 put, and I've been given a gift on how to trade the S&P 500. $1,200 call can still go higher, but we're getting awfully deflated over here, and these are 5-day up cycles and 5-day down cycles, and a new period starts on Monday. Welcome to the world of options. Welcome to the world of understanding S&P 500 put index options. Welcome to the world of how they steal premium out of calls and puts. Welcome to the world of manipulation, and welcome to the world of how do I even participate and get an entry. Well, we make it easy, and we have a strategy, and it will work accordingly, and then it'll come clear to everybody when we're making the live transaction, and all of the analysis is done before the fact, not after the fact. After the fact, You can go watch TV and get all of that. You can go to a lot of chat rooms and get all of that. All of it's after the fact. They always love it after the move. That don't make money. That doesn't make money. S&P 500, $1,200 call, $1,200 put. S&P 500.